What's going on, everyone? My name is Nicholas Merton here at Data Dash, and today is April 25th of 2020. Well, folks, I hope y'all are having a fantastic day wherever you are. And in today's video, we're not only going to start off by taking a look at some data science in relation to Bitcoin's price, but along with that as well, we're going to be spending some time to talk about altcoin dominance continuing to show strength and looking like it may be setting up for some interesting action going into the later half of 2020. Outside of that, we've got some news for cryptocurrency markets talking about China's blockchain network, and outside of that, we're going to be taking a look at some housing market data for traditional markets. So we've got a lot of things to discuss right after our quick sponsor. Our sponsor for today's episode is Ledn.io. For those of you out there holding Bitcoin long-term like myself, why not put it to work? Ledn has a suite of services to help you save, earn, and hodl more Bitcoin. Their B2X loan service lets you double the amount of Bitcoin you own through a Bitcoin-backed loan. Their savings account lets you earn interest on your Bitcoin, paid out in Bitcoin, so you can grow your holdings over time. And with their Bitcoin-backed loans, they let you access cash in a tax-efficient manner while keeping your Bitcoin under insured custody with BitGo and real-time proof of reserves. Get a 250,000 Satoshi bonus if you register with the link below and get a loan today. Alrighty, everyone, so let's go ahead and start by taking a look across the board at the market. Since we've talked, crypto markets have done a pretty good job since Thursday. We can see here across the board in the market, most cryptocurrencies are in the green here, sweeping across the board with very few exceptions. We can see here at the top of the leaderboards, we've got Engine, one of our top 10 coins for the year, Unibright as well, up 10.78%. Kyber up 9.2%, Energy up 8.12%, Basic Attention Token up 7%, and even Ravencoin down here around 6.35%. So you can see broader market here doing very nice. We've got some familiar names here, some of our top 10 picks for the year. Wanted to go here to take a look specifically at Bitcoin's price here and take a look through the ScalpX index. We can see here since we did our video the other day, we got actually a nice pop-up. It was like literally right after we had talked and stuff, and before the video had uploaded and stuff, the market was starting to rally up here a bit. Went from around 7,200 up to around 7,600 at its peak, and now we're hovering around $7,571. If we take a look here at the Fear and Greed Index, we're slowly starting to get more confident here, still well into fear territory here, not up to where we need to be in order to start fearing that we might be overbought by any capacity. And again, this is what I keep drilling to people. I think into the halving event, you're going to get a very nice rally over the next coming weeks. Just me personally, this is what I think is going to happen. There's no guarantee of it, but I think that there's going to be a lot of anticipation going into this halving event. And then afterwards, I think we're going to get some form of a pullback here. You can start to see here as well. Keep an eye on the BitMEX liquidations. This is public data that we get to see between short liquidations, right, which are the green candles, and then long liquidations, which are the red candles. And you can see it kind of syncs up with price. As we start to go upward in price, you start to see a lot more short liquidations, a lot more of those little green bars on the top. Okay, so this is what we're going to see more and more of most likely, and you can start to see if you get a lot of liquidations, basically you're getting short squeezes in this case, you start getting pressure to the upside. But again, long way to go here before we start thinking to any sense that we're overbought. We're just recovering off the losses that we had from back here on March 12th. Now, I want to go ahead and take a look at some of the data science models before we dive into the altcoin market. First thing I want to talk about is the HODL wave. We haven't visited this one in a while. The HODL wave is doing quite nice right here. We're still holding just about a percentage down from the peak here, or the relative peak here from January of 60%. This means that right now, over 58 to 59% of Bitcoin at the moment are currently being held for more than a year, meaning they haven't moved on chain for more than a year. So this is probably made up of a few different things. I'm just going to go ahead and negate probably the non-beneficial parts of this, which are traders who have their money on exchanges and they just haven't moved the Bitcoin, or the Bitcoin has been withdrawn off that exchange. But the vast majority of it is probably people simply holding it in cold storage solutions, holding it on exchange, holding it in some form of capacity in this case, or maybe on hot wallets, things of that sort. But again, most of the people here are probably actually holding it, and we can see that if we take a look here between these stats and everything, right? We have these kind of highs and lows and stuff, but the baseline here at a bare minimum is about 40% being hodled, and you can see here that at least over the last year and stuff, that number has probably increased, with some people, of course, being traders on certain exchanges. Now, another thing as well I wanted to talk about, which is Bitcoin profitability. Again, as we have recovered down here from around the upward $3,000 range and recovered practically all the losses from one of the worst sell-side days in cryptocurrency history, we're back now to 87% profitability. So if you bought anywhere in 87% of Bitcoin's history, all right, you have an 87% chance in this case of either being neutral or up on your money. So this is a very important thing here, and a very shortly lived asset in this case, right? Bitcoin hasn't been around for that long, and nearly about 11 years in this case to have 87% average profitability here in the sense of buying somewhere within its price history. It's pretty cool. And I think in this case, once we get, of course, back up here, that number is going to leap up to the upper 90% range, really, because at that point, you're just dealing with some of the peak highs here and the kind of irrational buying phase of 2017. Now, outside of this as well, in the sense of data science models, we also have the MV-RVZ score, and this is taking a difference into mind between the realized cap and the actual market cap here for Bitcoin, and it's dividing it by a standard deviation of the market cap. So long story short, we tend to see here that markets are bottoming when we come down to this range here, and we tend to see that, at least in the last cycle here, we really had two significant lows inside this range. And what you start to see with a lot of these data science models is a lot of people back in March were fearing Bitcoin being at its end and stuff. A lot of people were worried that, oh my God, crypto's done for. We don't know why this is happening. But the interesting thing that you'll find with a lot of these data science models is that we're just having basically a double retestment or double bottom here in this case for a lot of these data science models. And we'll see that, especially as we take a look at the 200-week moving average indicator, which we'll take a look at in just a moment. But you can see here, we came back down to this oversold level, similar to how, for example, we kind of held in this range for a while. As you can see over here, we were in here for a very short period of time, and we became overbought very quickly. So it's not too shocking again to see that over a longer period of time, especially as these cycles are getting longer historically, they're adding about a year each time we have a cycle in crypto markets, then we'd want to come down here and retest this, right? So I think it's a matter of patience here and looking at history. Excuse me. So next thing I wanted to talk about was the Paul multiple. So this is another thing in regards to mining. I know a lot of people are very curious about, what's the current environment like for miners. Well, miners right now are in a pretty decent spot. Daily coin issuance right now, in this case, so basically the amount of the dollar amount of Bitcoin being created in this case. So as we were talking about the other day, at the current moment, it's about 11.2 million that's being issued every day at current valuation. So that's actually about 7,000. So it's probably a little bit higher now. But we can see here that the Paul multiple in this case always comes down to this range here, usually at a ratio of 0.3 for its bottom. Multiple times here, right? We come down here pretty much every single cycle. Now this time around, we're coming back down. We tested in this range again. Anytime we see these kind of data science models or price come down to this range, similar to, for example, what we did over here or what we did over here, right? We came back down in some capacity. We're repeating history over a longer period of time. Of course, that's understandable, but we still came down to retest it just like we did the last two times. So I would say more than anything, this is consistency to a degree, right? This is seeing data science models playing out. And again, signaling to us that, especially when you take a look at the last two peaks over here, right? We came to a very similar range here, right? I actually went to a higher range, we went about 2.5. I think back here we went to 2.5, but in this previous cycle, we only went up to 2.1 and 2.2, right? Understandable that we're going to get some form of capacity in the sense of a pullback, right? We had a pullback here, pullback here. And one thing to always consider here too, guys, is understand that data science models will not be a magnet that holds price perfectly. And the reason I say that is because what we had during that sell-off was not only COVID-19, right? A generally black swan event across the world. Along with that as well, you had a rush to liquidity in this case, right? Across the board in most markets. But above all, you had, at the end of the day, one of the biggest Ponzi schemes in history that had bought out or basically stolen a lot of cryptocurrency from the investors in the program, basically dumping it on exchanges across the board. That's what you had, right? And that's why prices dropped so quickly, right? So anyways, just want to keep that in mind here for any kind of discrepancies. But for the most part, data science models are showing that we're cheap. That's the biggest thing that I want to emphasize here. This is probably the best model you could look at right now, guys, which is the 200-week moving average heat map. Okay, so I like the heat map aspect of it because it actually kind of showcases like the price change, and you can see as we start to get into the higher range territories, when we start to get into overbought territory, when we start to get these weeks where we're making 14-16% leaps in price, right? We can see here in this case that it's usually when we're peaking out. So we're in these blue areas. This is where we should get a lot more confident in this case that, you know, prices aren't in irrational territory, that they're most likely coming down to bottoming territories. And we can see here that's exactly what's been proven over these last two cycles, and the one we're currently stepping into right now, and then the previous one. And the key thing here that I noticed as well is the double bottom. We had a bottom over here in January of 2015, and then almost a year later, right, in September, in 9 months, we had our secondary bottom not too far away. Not many gains in over 9 months. Definitely isn't fun, but that's what happens when market bottoms. You need to have these kind of bottoms to solidify that you're stepping up for the next cycle. And this time around, we actually did a little bit better, whereas we went, for example, from, I guess you could take the absolute bottom at 175, right? Roughly about a bottom of 200 to 230 in a 9-month period. We've actually, from our previous bottom here, gone from 3,100 up to a low in this case of around 3,900, right? So about the same kind of range here. Now, again, the chart's not going to show us exactly. It's compounding in a lot of daily data. But in this case, right, similar kind of price action here, right? A slightly higher low here on an overall 200-week moving average that's continuing to grow. That's what we want to see. Discount the price action, guys. Look at the moving average. This is what's really key here in the sense of longer trend formulation, right? All right, talking about altcoins here, taking a look at the daily. Altcoin dominance looking really good here. Again, the daily alone looks pretty good, but I just want to showcase this to detail a little bit why I got the trend lines. It's taking in the two major resistance points here that we still have yet to retest, and along with that as well, taking in the major support points and previous resistance in the past. You can see here price or dominance stopped out here. It also made two lines that are relatively close to that. So we've got our lines of support and resistance formulating in a very nice wedge, and you can see we've been starting to set higher lows here. In fact, we've started to break away from the line of support, looking like we want to test this line of resistance for the first time since all the way back in May and June of 2018. Very, very key thing to watch for, guys. This is why we've been positioning ourselves in altcoins. That's why back here in September, we flipped the coin. We saw the trend reversal coming between our indicators. We saw that altcoins in this case had been way oversold. Bitcoin had had a great rally. It practically doubled its dominance in this period of time. And it was ready for, altcoins to get some risk taking in this case. And the market has been proving that so far. So again, we can take a look at a lot of individual plays. Kyber Network, for example. Just go ahead and take a look at the daily on a lot of these plays. Kyber Network doing great, having a great 2-day rally going from 6,300 Satoshis up to 7,400 Satoshis. And again, kind of doing with what we're hoping for. We didn't get a pullback all the way to this bottom here. I don't really care. I wasn't looking to really add in anymore. I already have my positions built in. We can see here still setting a higher low, continuing on with this line, and I think we're going to continue the trend here. Even faster than probably what we predicted here in this case going into the next coming months. Along with that as well, basic attention token, holding on that critical key support that we've seen it hold in the past multiple times. So we can see over here, here, and here, price still holding there, looking like it might start to cusp up, not only test back up to this high range over the next coming month or so, but along with that, start to test up towards our longer term price targets for exiting out of the trade in this case, right? We have over 5,200 sats, 7,000 sats, and 9,400 from the absolute peak. Okay, Raven coin, been one of the more disappointing ones out of all the plays in our portfolio, but looking again like it might cusp up back to this range around 300 sats. If we want to take a look here at ETH is doing nice as well, holding up relatively close to its relative highs back in February before we had the sell-off. The USDT chart is looking really good. Looks like we're about to break out of this very long-term wedge here. Nice rebound here from the major sell-off we had. And then outside of that as well, I think there was one more I wanted to check. Ren as well, looking very nice. Continuing to build up, setting higher consistent lows here. You can take a look at the weekly. It simplifies the whole thing. This, to me, looks like it's finally set up to break out even faster and further beyond where we saw back here around 1,300 to 1,400 sats back here in July of 2019. So keep an eye on these plays, guys. I'm not saying you need to buy anything. You guys have to make these decisions for yourself. Same goes here for Link. This was probably one. I forgot to cover Link here. Link's still doing well, holding up towards its general resistance range in the past here. So it's a matter of seeing whether or not we can kind of get to this next step here and we can break out of that wedge. I don't know how soon we're going to get that for altcoin dominance here, guys. To be fair, all I know is that the trend is strong right now. I'm not trading anything else until that trend changes. I mean, I'm not selling any positions. I'm not really making any major allocation changes until I see that trend reversal. And right now, it's looking quite good. The next step here is to test back up here to the line at 38 here over the next week or so, around 37, 38, and see if we can close above this range here, right? So our real close is around 36. If we can close up where the wicks was previously, this is going to be a really big confidence sign for altcoin dominance, especially closing out of this wedge. And what I think is most likely to happen, I think we've probably discussed this before. I'll go ahead and just draw it for you guys. This happens a lot of the time in these very long wedges. We get a breakout, right? I don't know if it's going to come this soon. It could come over next month or so. We get a pullback. We ride along the line of resistance as support, and then we start to truly break out. Okay. Now again, it's probably not going to happen this fast. This is only going into the later part of 2020. It's probably going to take a little bit longer, right? But I have no doubt we're probably going to get back up to this range at a minimum during the next cycle. So just keep that in mind, okay? Anyways, we've talked a lot about altcoins, talked a lot about Bitcoin. I want to go ahead and talk a bit about what's going on in the sense of the world of blockchain. Now, I know many of you out there are probably interested, but at the same time kind of doubtful of any potential in regards to like centralized blockchain systems or governments or central bank blockchain creations or cryptocurrencies or digital currencies created by the central banks. I wouldn't call them cryptocurrencies. I want to go ahead and talk a little bit about some of the news we have about China's national blockchain. Now, this is not really so much focusing on the digital renminbi or the digital Chinese yuan that's going to be coming out, the central bank digital currency. That is something else that's going to be focused on. It's going to be rolled out further on throughout the year. We've already got some leaks in relation to that, but I want to talk about something that China is working on as well, China's national blockchain. Now, it's not actually called that. I have to get the name here. It's the Blockchain-Based Services Network, the BSN. Now, to put it simple, what this is relating to is this basically is a system. It's a permission network that China has really spearheaded that has over 100 different nodes at the start. And it's going to basically, it's a fork off of Hyperledger. So again, permission chain in this case. But basically is going to serve as a framework for not only China, but other commercial business interests from across the world to interconnect with one another, to be able to exchange data, to basically make all kinds of forms of transactions, communication of data, a lot of different things here over this new blockchain network. Now, this is a big part of what China's been working on behind the scenes in regards to its efforts since 2018 in this case 2019 really. I mean, coming publicly, they've been talking about this from, it's kind of been rumored since 2018, but since 2019 about how blockchain is really going to be the future for China in this case. So you can see it's headed up by a lot of major companies. UnionPay in this case, one of the largest payment providers throughout China. China Mobile in this case, a lot of major corporate names coming together, serving not only as consensus nodes in this case to be able to confirm and validate information, but also to be able to just simply run the network in this case and participate in it and actually utilizing it probably in some of their business services. So again, at the end of the day, there's a few big quotes here. Right, there's a lot of major kind of things and details you can look at. At the end of the day, the major thing that stood out to me is down here. While the BSN itself is a permission chain forked from Hyperledger Fabric, it will allow interoperability with public chains and other decentralized platforms, which will be fully implemented by July of 2020. It's only a few months away. The protocol at launch will already be interoperable with major blockchain platforms and frameworks such as Hyperledger Fabric, Ethereum, EOS, as well as most relevant mainland-based blockchain protocols for enterprise, including WeBank's Fisco whatever we can talk about. Again, there's a lot of private systems they'll probably interact with, of course, if they're going to be interacting with a lot of the major corporations throughout China. The part that sticks out to me is the public chains it will be able to communicate, Ethereum and EOS. This is really interesting to me. I have to say, I'm actually kind of surprised that China, in this case, its blockchain-based service network, it's this massive project it's been working on outside of the basically the digital yuan. I'm really shocked to see that they're actually going to plug in to permissionless systems. So people may be able to utilize this system in some way and interact with DeFi or immutable smart contracts and be able to interact with digital assets and tokens that are outside of China's control. That would be quite interesting. Now, again, I don't know how this is going to look, and it might be that, for example, maybe it's not as free and transparent as it's claiming to be throughout the article. But if that's actually true, then I'm very intrigued to see how this is going to look, right? And at the end of the day, guys, we can be in our kind of cypherpunk bubble here. And yes, I don't like the you know the CCP and stuff. There's a lot of evil things about China as a country, right? We've got flaws here in the United States and many other places across the world, but China does have a lot of major flaws, and there's a lot of things I dislike about China. But at the end of the day, I won't steer away from the idea that there may be some innovative things that are coming out of this. And it makes me upset to a degree that we can't say the same here in the United States. We don't have this kind of motivation to innovate towards things like blockchain and to kind of integrate these new layers of technology in through our corporate and enterprise sectors of the economy. I would love to see some new technological innovation like this in our own country. But China is going steadfast towards this. President Xi has made it very clear that they're going to be pushing for this. So I'd like to hear from you guys. Like, what do you think about this? Do you think this is just a lot of hogwash? Like, there's nothing really coming out of it? Or do you think that this is going to be a new layer in the world of commerce and business? I mean, this is supposedly going to be used for trade and all kinds of different things like data exchange between companies. A lot of interesting business practices are going to possibly be going on to this BSN. So I'd love to hear what you guys think about it. Now, last I want to talk about in the sense of traditional markets, right? Key thing to talk about here is housing, okay? The housing sector is definitely going to start reflecting here over the next coming weeks as we start to get some of the data, differences in price, confidence, and the sense of home building. And that's what we're going to be talking about here today, the historic decline due to the coronavirus in regards to confidence for home builders. This is a precursor here. When the home builders get fearful, this is usually your sign that something is going to come probably 4 to 6 months down the line in this case. So basically, we can see here, we'll go ahead and just jump straight into the chart here, the housing market index. You can see here very much has had one of the most stark declines in history for home builder confidence. The current level is at 30 points. The bottom here for 2008, really which was formulated in 2009, was 8 points, and over here in 1991 and 1992 is 20 points. So we're probably nowhere near the bottom here, right? There's still probably too much confidence in the sector right now, but we have dropped from a stark 75 points. Probably a month later it was down probably to 71, 72, down to 30. I mean, this is serious stuff, guys. This is the April number that came out. It's going to be interesting to see what happens in May and what happens going into the summer. Are we going to see home buyers come back in strength as things start to reopen? Like we tend to see in the summer. The summer tends to be a really good season. I don't know if I can say quite confidently that it is going to be an eager buyer season, guys. I think people are waiting for lower prices. I think that mortgage rates are probably as low as they can get. Right, in this case, mortgage rates right now are right. I think if I last checked, it was around like 2.53%, and people have started to refinance, right? But for the most part, the Fed's going to probably have to lower interest rates even more in this case, and that's going to mean the Fed funds rate going down into negative territory in order to get mortgage rates even lower. And many banks in this case have already started to set some restrictions here in regards to lending. It's not just a worry of the interest rate having to go down in order to entice more buyers. It's a worry about bank profitability. It's a worry in this case about banks now setting higher restrictions. They need a higher credit score. In this case, you need to have a larger down payment. I think it was JP Morgan or Goldman Sachs that recently set that. And again, we talked about how banks we usually follow one another in these kind of general practices and setting higher standards during these more conservative times. And I think at the end of the day, it's going to mean housing prices, especially in the major cities where the values have been so inflated by foreign buyers. It's going to come down with a wreckage. Especially, this is another thing to think about in the long term, and a long-term hit on the overvalued properties in cities. Think about this. A lot of people who are working home and remote right now are probably going to continue working remote over the next few months. And I would say in the long term, I can bet you, I think as we might have discussed on a previous video, I know I talked about it recently with Tio from Arcane Bear, another crypto channel I recommend you guys check out. He's a good friend of mine. I was telling Tio when I was in New York City that right as the beginning of this kind of COVID thing was going on in early March, there was a taxi driver, and he brought up a good point. And he said, I'm not the smartest guy in the room, Nick, but I'll tell you this. There's two things I realized, that if I'm an employer for an employee in New York City, I not only don't want to have to buy the office space that he needs to work out of if I don't have to, but along with that as well, I sure as hell don't want to pay the income he needs in order to pay down the rent that he needs in order to live in New York City. And it's a double whammy effect here of property markets where, again, we've had to constantly pay these kind of valuations in order to keep people in these regions. But in reality, a lot of these people are working white-collar jobs. They're working at a computer where you could be pretty much anywhere in the world. Now, sure, it's nice to be there in some capacity. Yes, you want some employees to be there directly at the office so you can talk in person, get things done ASAP. But at the end of the day, there's a lot of employees who could be working elsewhere where a company could pretty much buy a place for you to live or pay the rent for you to live somewhere elsewhere outside of these major cities and could probably pay you even a slightly lower salary in this case, and you'd still be doing better off with what you could get for your spending elsewhere. I think companies are going to start to realize that. I think they're going to realize it very, very soon. Anyways, just wanted to propose that out to you guys. That all being said, I hope you all enjoyed this video. If you liked it, drop a like. As always, again, guys, leave a comment if you have some thoughts on the current market, whether it be the housing market, what's going on with China's blockchain services network, or what do you think is going on in regards to Bitcoin and altcoins? I want to hear from you guys. I hope you all are having a great weekend wherever you are, and I'll see you all in the next video. Stay tuned.